Welcome traders to Wyckoff Advanced. Now, in this chapter, I'm going to show you our way on how we're going to trade the Wyckoff accumulation and the Wyckoff distribution phase. As we've learned so far in the previous lessons, there is a systematical approach in this pattern. It is at the end a pattern, right? So everybody knows how to trade that if he is typing this in Google, if he just reads a little bit about Wyckoff and how he could potentially take advantage over this mastery of work. And as you can see, even us, we're going to use Wyckoff, but I'm going to show you our specific way as it is a little bit different. I'm going to show you now how every retailer is viewing it, okay? The concept itself is already explaining a way or a process where already the majority of the traders are already losing. But there are also traders who are using this pattern, and I'm going to show you on how even these people are going to not get involved in such trades because the market is super cheeky, as we know, right? And I'm going to show you our specific approach on taking that. Now, quick summary, so we do not forget what we've learned so far, is the specific scenario where price is in a downtrend. Okay, so price is moving down here, all the way back down. And here, the first time everything is getting started. It starts in reality here with an OB. Okay, that is an OB. It starts with this point where already a lot of traders, I forgot here a little bit, where already a lot of traders will lose because they think, the first place, that they need to go short after price is giving this reaction. They think they need to follow the bearish trend, and this is exactly the first point where they're going to lose. So I think this is familiar to you. So this is our liquidity. So price can come to the OB, mitigate that, and our target is exactly for price to come lower to hunt this low. Okay? And afterwards, what will happen is price will start with a reaction, will cause a break of structure right here, and people will think that after this break of structure, price will start to move up, but it is still bearish. So price will just go into the next OB following bearish order flow, and it will then go lower to hunt again the next low, which is the target. So this is how we can identify right now Wyckoff from a little bit of a different perspective at this. Okay, so this is liquidity, which is in reality a break of structure. And this is like the real break of structure, but this break of structure will not work out because price wants to go lower as it is right now in this bearish order flow, right? And it will go down lower. And then the first time price will break structure here. So that will be then the next opportunity somewhere here in a demand zone to get involved in this trade. Okay, so that will be still a very pattern-based approach. Okay, everything totally true, but right now I just added the elements that we should look for, right? Because we know all these things will never look exactly like it looks like. Now, very important what price also have, and that will make the difference if it will start from here to move up, or if it will really make the spring and then will move up, is something very relevant. And that relevant element is in reality an OB. So that's actually, this kind of thing here will in reality tell us if price will make this spike or if it will not make this spike. If there is something relevant and if the overall context will fit that. So basically price is moving down, right? Here in this case, price will never move up as price is not where it needs to be. But still, SMC traders and retail traders will assume that this is in a support area. okay, or in on-demand area. What is for us super relevant is that we're going to refine everything down to the M1. So overall, this whole price action that you can see here is the M1 time frame, for instance, or everything is on M15, of course. But for instance, we just relay right now on the M1 because our idea is, okay, on a higher time frame, let's say this is the M15, looks like this, right? And we are approaching here an M15 demand zone. And within that M15 demand zone, we're refining everything to an M1 OB. And the thing is that the first point here, well, in reality, so the selling climax, will in reality not mitigate the M1. So there is absolutely no reason why price should suddenly just take off or something, even if it broke structure here or something. No, price will actually in reality just go to make a mitigation. But people think that because of prices breaking that, it needs to go up higher. Okay, SMC traders think, hey, I got a new supply area here, so I need to go short from there. And that's not true because you need to follow bearish order flow, which price will always give you. It is just sometimes a little bit tricky to understand. Okay, but we know that, and we should just be aware of if price did not mitigate something relevant, then why should you expect price to go up? Okay, so furthermore, price will then go down lower and will hunt, of course, the selling climax and creating the secondary test in phase B at this point here. Okay, so this is the low. Now many think because of price did took out the low and it is starting to break here structure that it needs to go up, right? So they're just looking while price is making this pullback to enter here in a form of demand area or trying to enter on the next demand area, and price is in reality really moving up higher, you know, to really make people exciting. Yeah, we're making crazy profits right now and so on. But then what price is doing is just using this form of liquidity here, and it will just drop price one more time to the downside because one specific reason, and the specific reason is that this ST, okay, the secondary test in phase B did not really mitigate something relevant, okay? And what we expect, because we are an OB, we would like to see price, you know, coming lower to fill in that imbalance, okay? And this secondary test in phase B could potentially fill in a part of the imbalance, and then it could in reality even move up higher. So making this scenario making it true. And this is like the scenario where it will be then a little bit tricky for you to get involved in the trades, because we should only take the trade as soon as price will really take the M1 mitigation, because we cannot always rely on the fact that, yeah, maybe price will just react off of the imbalance. So we do not know that, and this is why we should not risk this kind of thing. So we just wait for price to really come to the M1, make a proper mitigation, and then we expect price to go and follow our direction. And then for us, it is pretty simple to follow this pattern because we know already what's going on here behind that, okay? And what we can see here in reality is just a liquidity concept, okay? Nothing else. It's just a liquidity concept with, yeah, I would say you have here more things to consider because you see just a little bit a bigger story, I would say, okay? So you see here a story behind everything, so a better scenario which looks more reliable right now than just viewing trend line liquidity and you say, yeah, but price will go and hunt the trading liquidity and then it will go down lower, right? So you have here a little bit more story, more details, and it is a more better example for the reality at the end, okay? So what I wanted to say is, how do we enter right now? This is important for us, right? So we could just consider, yeah, let's just wait after price is hitting this demand area for a proper mitigation, proper break of structure, and then we look for proper mitigation inside it, right? So on the first OB, or maybe here is still something left which is not mitigated, so price would just use this here to liquidate it and to come for a deeper test. That's also, of course, an approach that the market could go. Important for us is, of course, that this structure is going to be broken, right? So you hit hit it to the downside, hit it to the upside, and then you expect price to come here. Ideally, you have here a little bit of liquidity, to have a little bit more extra confirmation for everything that price is really about to go up higher. That's one approach. The second approach is risk type of entry right at the spring, okay? Because we know already what price is doing here. We know price is preparing for the drop because the intention is for price to move down lower, okay? To mitigate something and then to activate the order block, right? To activate here the big position that is located and then to bring the price all the way back to the upside. And for us, a target is specifically what? The trendline liquidity, right? Because this is a trendline liquidity. You can also see pretty nicely this is, your bearish continuation to the downside at the end, right? So a bearish trend line here, trend line there. So you see, this Wyckoff pattern concept is super powerful, but you need to know how to use it properly. You need to understand the full story here, like I'm explaining it right now behind it. Many people just view it the way on how Wyckoff explained it. I try to explain it with order blocks, right? So not just with levels. Of course, it makes sense. We just break a level, which is a source of liquidity. But right now, just to explain you in our words with order flow and so on, there is basically everything that we need and that we can go systematically with a risk type of entry because we know already what price is about to do. So we know already the potential outcome because we know what price needs to target, and price is specifically targeting here this liquidity. So how will be it able to target this liquidity? Well, specifically after here creating this liquidity to the downside and then making a proper mitigation, and then price is just moving in that one specific direction. So I think this is a very, very powerful approach, and this is the advanced Wyckoff, So do not just think always in terms of this patterns, okay? So do not always try to just identify the preliminary support, the selling climax, the automatic rally, the secondary test, and so on. No. What you want to identify is this storytelling behind it, okay? Because every single movement makes sense. Every single movement here is grabbing liquidity. Every single movement tries to make people believe that price will push in one specific direction, but the only goal for this whole price action and in general in forex trading and all other financial markets is to liquidate as much people as possible. So to collect all these stop losses, because only then it is possible for the big institutions, for the smart money, for the composite man to really take advantage over this market. And like I said, the goal for them is to take control. Always, they want to take control. Even if they are sometimes in a drawdown on a few positions, the main reason what they're doing here is to take control. And this pattern is just explaining this goal, this purpose of the market very perfectly in a few movements, right? This is specifically everything that we need to know. So this is why I like the Wyckoff concept pretty much. But like I said, I don't like it to use it with that one pattern approach, like, okay, only after price made spring and we got the break of structure, we are interested in looking at that, because that would be very often too late. Or sometimes, price is moving, breaking this, going down to take a demand here, and then it is moving. Also, what is super relevant is, what if this whole thing here, this M1 OB that I mapped out, is, yes, of course, it is a valid M1 demand, everything clean. But what if the M15 and the 4 hours and the 1 hour is not correct? What if at this PY you should not even expect price to give you any kind of crazy movements? The problem with that would be that if price is going to give you like a break here, right? A break there, will move down, and you expect then from here price to go all the way back up to follow that. So let me just make this quick example. So like for instance, price is breaking that, because I know many people just look here for this break and then they expect price to come here, right, to mitigate something, and then there is their entry. So like this, right? So they make the break, and then you expect price to come down lower, and then price to follow crazy. Well, if this is the wrong OB itself, price will stage you this kind of situation. It will give you that because they know people are using this Wyckoff schematics, and they are just waiting for you to enter your long positions at this point, because they're clearing out already the people here, right? And then they're clearing you out because you think, oh yeah, that's my break of structure. The thing is, this is what you can target right after you understood that this is the POI, and you understood already that your entry should be somewhere here. You could already make it like your first target here, for instance. Now, I do not recommend that because in many cases that will be just 2 less pips. But if you can capitalize here on around 20 to 40 pips already, because sometimes these movements are very big, sometimes you see these on the higher time frames, then that's totally fine to close it right up there. But what we need to understand is that if this is the wrong POI itself for such a movement, then price will just melt down. It will just use this as additional liquidity, because probably the whole intention is to come and to mitigate something here, because this is a higher time frame supply, and then price would just go all the way back down. So that's important. You need to view it always with more perspectives than just one single one, because you just need to understand on the higher time frame where price needs to go, and if this is even a valid demand zone. If it is a valid demand zone, then it will provide you with good movement, right? With 20, 40, 60, 80, even 100 pips, depending on what POI it is. If it is just right now a POI where you can just expect a small pullback, then 100% of the price is giving you like this liquidity grab of these equal highs here, it will just reverse. So this is also something that you always need to understand in what kind of situation you are, and then to apply the Wyckoff pattern the right way. Because the problem is just if you recognize the pattern after it occurred, right? Because that's also what I see many times. It's like this already occurred. The move up till here. People think that when price will come then to the next level of demand or support, or I don't know, it will go and continue forever to the downside. Well, that is not always the case, because if here right now, again, you will have a relevant OB, okay, on a higher time frame, then price from there could totally reverse all the way back down and just hunt the Wyckoff as additional liquidity points. Okay, because once price is moving, then you have again buyers, right? And if you have buyers, that means you have trendline liquidity somewhere, you have an uptrend channel and so on. You got here a lot of liquidity, So at some point then, that one will get hunt. Just people forget about it. So this is their expectations. But the reality will be like, okay, you go long here, price moving, and then boom, liquidating you. Then again, people believe it will go long, breaking structure and all these things, and then it will go down. Okay? That's exactly how the market will always trap you. You believe that this is a demand, but no, that's not a valid demand for you to look for, because the Wyckoff pattern is already done. It already occurred. The whole approach has already finished, because they trap people on both sides here, right? With the move, everything else. Those people who understood the trap, they understood, okay, I needed to go somewhere here long, maybe here, maybe already here, maybe at the spring, right? So you have like 1, 2, 3 entry possibilities, and then people try on the fourth one their luck, and this can work out, of course, but not if the price has here a relevant OB and price is about to go lower, because the next target is already somewhere here below. So this is where price is already heading, and then this whole thing will just be new liquidity. Now, hopefully you understand this concept. As you see, very powerful, very nice example and so on, but you need to just apply it the right way, okay? Thanks for attention, guys. We will see then in the next video.